So let us start the next video of company final accounts, or here is the second video of company final accounts. Hello everyone, I am Dr. Vasant Boraste from Department of Commerce, KTHM College, Nasik. Today I am going to discuss with you about the pro forma of company final accounts and its items which we have to prepare in the company final accounts. So let us start the pro forma of company final accounts. So here is the company final accounts as per the Companies Act 2013. So this is the pro forma of balance sheet as per the Companies Act 2013, where we have to prepare part 1, that is balance sheet. After that we have to mention the name of the company, then balance sheet as on or as at, and the amount in rupees as it is considered that it is an Indian company. So here we have to prepare 4 column, that is particular, second one is notes, its number, and the third one is figures at the end of current reporting period, that is current year figure, and figures at the end of previous reporting period. So these amounts will be for previous year, but we have to consider only this column and from exam point of view. So as per the Companies Act 2013, it is mentioned that there are certain liabilities as well as assets, and the balance sheet is divided in basic two items, that is equity and liabilities, and second one is assets. Where under the head equities and liabilities, first one is shareholders fund, where there the first item is share capital, that is equity share capital. After that the second one is reserve and surplus, whatever reserve and surplus we have to mention all this in over here. Then money received against the share warrants. After that share application money and pending allotment. Then non-current liabilities, as you know, there are various non-current liabilities. It is divided in 4 subheads, that is long-term borrowings, deferred tax liabilities, other long-term liabilities, and long-term provisions. So these are the some non-current liabilities list. Then the certain items of equities and liabilities head, that is current liabilities. It divided into 4 part, that is short-term borrowings, trade payable, other current liabilities, and short-term provisions. The detailed items, which items are to be considered under share capital, reserve surplus, or any other head, here we are going to discuss in the same video. After that, here the total of liabilities is mentioned. Then assets, the part of assets you can see here. The assets are basically uh, divided, or we can say subcategorized in under 2 heads, that is non-current asset and current assets. Under the head non-current assets, the assets are again subdivided into 4 assets, that is fixed assets, where it is subheaded as tangible asset and intangible assets. As you know, there are certain tangible assets as well as intangible assets, work in progress, and intangible asset under development. So these are the 4 subcategories of under fixed asset. Then second category of non-current asset is non-current investment, then deferred tax assets, long-term loans and advances, and other non-current assets. So these are non-current assets under the head fixed asset. Then second type of asset is current assets, where we can see the current investment, inventories, trade receivable, cash and cash equivalents, short-term loans and advances, as well as other current assets. So the total of assets must be matched with the total of liabilities. So here is the total of liabilities. So the total of liabilities must be matched with the total of assets. So this is the pro forma of balance sheet of the company as per the Companies Act 2013. After that, we have to see the pro forma of profit and loss account, which is again same headed as state part 2, that is statement of profit and loss account. And you can see here the name of company, then profit and loss statement for the period ended. So whatever the year end, it should be mentioned over here. And always absolutely it is right that all the amounts must be mentioned in rupees, as it is assumed that the company is an Indian company. So again here are same 4 columns are there: particulars, note number, figures at the current end of current period, and figures at the end of previous reporting period. So we have to consider just this column only, that is figures at the end of current reporting period, and this column is for actual, or we can say practical accounting. Now here the first item of profit and loss account is revenue from operations. So whatever revenues we are going to receive from the various kind of operations, it should be mentioned over here. Then it is headed as other income, then total revenues, which is the total of first one and second one, that is revenue from operation and other income. The total of these two you have to consider over here. Then expenses, there are certain expenses where the first one is cost of material consumed, second one is purchase of stock in trade, changes in inventories of finished goods, then work in progress, stock in trade, employee benefit expenses, finance cost, depreciation, amortization, and other expenses are there. So this is the total expenses. After that, we have to mention the profit before exceptional and extraordinary item, that is and items and tax, that is 3 minus 4. 3 means the total revenue and 4 means expenses. So total revenue minus total expenses, total of this item number 4. So we are going to calculate the 3 minus 4, that is income minus expenses. So we will get the profit before exceptional and extraordinary items and tax. Then some exceptional items we have to mention over here. Then profit before extraordinary items and tax, then extraordinary items, then profit before tax, which is calculated as item number 7 minus 8. So here 7 is profit before extraordinary items and tax, and 8 is extraordinary items. So after the deduction of extraordinary items from profit before extraordinary items and tax, it will be called as the profit before tax, that is popularly known as PBT. After that there are some tax expenses, which is as a current tax, deferred tax, then profit or loss, whatever it may be, for the period from continuing operation, that is 7 minus 8, which we have calculated over here the profit. Then profit or loss from discontinued operations, we have to mention over here. Then tax expenses of discontinuing operations, profit or loss from discontinuing operations after tax, profit loss for the period, earnings per equity, that is called or we can say that is subcategorized as basic as well as diluted. So this is nothing but this pro forma of profit and loss account. uh, uh, then there are certain things, that is see accompanying notes, the financial statement. As I already mentioned in the first video of company final account, that the balance sheet as well as the profit and loss accounts must be supported with the some financial notes or some accompanying notes, which we have to prepare, and which are the annexures for balance sheet as well as profit and loss account. So with this I would like to say thank you very much. In the next video we will discuss about the various notes and subcategorization of, say for example, share capital. So what items will be included under the share capital, we will see in the next video. Thank you very much.